Hello, everyone. Welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And I just want to do a quick video about the job report estimate. I was doing one and then I had computer problems. So I couldn't do everything I wanted to do today. We'll go over some of the other stuff in later videos. So anyway, let's get into the big news of today, and I'll just do forward looking, so not what's happened today. If you look at it, this finally came out. I was talking about this yesterday, but non-farm payroll growth revised 818,000. So that means they revised it down. It's almost a million. And here it is. Bureau of Labor Statistics said the actual job was 30% less than initially reported. This is the largest revision since I'm highlighting 2009. And this is what I said. You're going to see after the election here, the data get worse. Fed's going to have to lower rates, and that's when it will go to gold. And that's what it was. So as you can see, just really bad data. And if you're looking at it, I've been talking about this in the channel. They're way overstating and going back and revising it down. So you can see that this is going to lead to much worse economic activity. And I don't think this is going to be the only one. I think there'll be revisions in other ones. So as you can see, they're way overstating how many jobs. And I think this is a conservative estimate. I don't think this is a pie in the sky one, but and to show how bad the economy is, here it is. I'm gonna do this from zero hedge now. And no one talks about it, but here's a couple of things. I don't talk about this too much because this isn't in. A lot of other people talk about this, but if you look at 2023, this bar here, the green bar, all the jobs gained were part-time jobs. They weren't even full-time jobs. If you look at it, we've lost full-time jobs. So that's the first thing. Not only are they overstating how many jobs, if you actually look into the numbers, all the jobs being created are part-time jobs. And then if you actually look at it here, where the job creation is going to, it's all, illegal and legal immigrants, people on H-1B visas, H-2B visas, which are low skilled H-2B, foreign born. But if you look at here, the native people born and raised in America, the majority of the student loan debts, they're losing jobs. So the Americans are actually losing jobs, and all these job gains, it's not even going to US citizens. Well, maybe some of them are citizens, but they were only citizens for a short, amount of time. So grossly, not only are they overstating the job numbers, but all the new jobs being gained are part-time jobs, and they're not even going to it. So anyway, and then I talk about how dumb corporate America is. Here's a perfect example. Goldman Sachs sees the downward revision and exaggeration. Like really, like they believe every headline number from the BLS, but now they don't believe the BLS. So here it is, exaggerated. So here, we think that today's downward revision to payroll grade exaggerates to the degree to which job growth's been overstated about 500K, whatever that means. So likely excludes unauthorized immigrants who are not in the employment insurance, but were correctly picked up in the payroll. So, and they say it will be revised up in recent years. Well, yeah, recent years it was quote unquote revised up, but we're not in recession. And even, I don't even know what they mean. Yeah, they think it should be about 300K or 25,000 a month. So no, they're just delusional. I don't even know if they're anything, but this is what I said. Like, it's not just the government sector that's incompetent. It's the people at Goldman Sachs, the financials, and other so and then if you look at it here, Sir John Templeton said the most dangerous 4 words in investing is this time it's different. And this is actually a great name. Steve Leisman. US job growth revised down since 2009. Here it is. This time is different. Yeah, the most dangerous words. And that's what they're using. So if you look at this, what this means going forward is you're going to see a lot worse economic data. This is just what they're admitting to. It's way worse than what they're admitting to. And you saw they've been revising down the retail sales. I don't even think this is going to come. And that's why, we're going to see recession. There'll be uh, the stock sell off eventually when they realize we're in a bad economy. And the Fed's going to do QE. And in my opinion, this is going to be uh, this money is going to flow to gold. So anyway, that's all I have, and just want to do a disclaimer. None of this should be construed as investment advice. Just my opinions on the markets and what's happening. So more to talk about. I want to talk about gold mining and whatnot heating up and what an end of the bull market and everything looks like. And I have other things to talk about. So there will be videos this weekend. It's hard to do it during the day, but I wanted to get that payroll thing. As you can see, they're greatly revising. This is the biggest revision. And of course, are they going to say, do they even say to the recession callers, like, oh, you were actually right. The economy's worse. No, they just make up their own stuff. And it's not the government. I saw you, it's Goldman Sachs making this up. So anyway, well, when they're done in for during the commercial real estate bubble and everything else, I wonder if they're going to think it's exaggerated then. So anyway, hit that like button, subscribe, and I will see you next video.